Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report about Molina Healthcare, and let me tell you, it's not just about doctors and hospitals unless you consider your portfolio needing some immediate care. The company just released some preliminary financial figures for the second quarter of 2025 and gave an update on what they expect to earn for the whole year. In short, we will find out if Molina expects to make lots of money like a pharmacy charging 10 times the cost, or losing money as if it invested in Blockbuster just before Netflix became mainstream. If you want to have early access to more insights from corporate filings, there is a Discord community linked in the description. Let's get started. This filing is an 8K, which is basically a quick update that companies send to the Securities and Exchange Commission, or SEC, when something important happens. In this case, we are getting their results for the second quarter of this year, 2025, and an updated forecast for the full year. The reason for putting out this 8K is to share their press release. It's all about getting the word out on how they're doing financially. Molina Healthcare is traded on the New York Stock Exchange under the ticker symbol MO, knowing that is a good starting point before diving deeper. The press release is where the real juice is. It talks about how much money the company made and what they expect to make in the future, and we're going to pull the interesting highlights. Navigating financial tables can be tricky, but we're going to focus on what matters most in Molina's announcement. Let's find out if Molina is living up to expectations or if there are some surprises. Here we are, Exhibit 99.1, which contains the press release we've been talking about. Okay, straight away we see some good news. Molina is raising its forecast. Adjusted earnings per share, which removes some accounting complexities to give a clearer picture of core profitability, are now expected to be at least 20.75 cents, even 5 cents. Initially, they thought they'd make less, and this is a strong signal that business is going well. In the second quarter, Molina is saying they're going to report earnings per share of $5.63. It gives a snapshot of how profitable they've been recently. The CEO says they are pleased with their results, which sounds like a good thing. But remember, it's their job to be positive. This announcement included some financial updates, including premium revenue. Premium revenue is an important metric for health insurance companies like Molina because it's basically the income they receive from premiums, the monthly fees that people pay to be covered. For the second quarter of 2025, they are expecting total revenue of about $8.6 billion. To put that in perspective, we need to look at whether that's growing, stagnant, or shrinking compared to previous periods, and think about how it compares to similar companies. And the key here, premium revenue is expected to be around $8 billion for the quarter. Premium revenue is crucial for Molina because it shows how well they're attracting and retaining members in their health plans. The higher the premium revenue, likely the more members they have and the healthier their core business. What seems important to retain from this filing is that Molina bumped up its earnings per share guidance for the full year. They're now saying 20.75 cents per share or more. Initially, they thought they'd be making somewhere between 25 cents to $20.75 per share or more. Initially, they thought they'd be making somewhere between 27.28 for them. Jeff D. Barlow, Chief Legal Officer and Secretary, are the guys who signed off on this report. Now, what are my thoughts on Molina after analyzing this 8K filing? Molina seems to be doing well financially. The company is making more money than it initially projected, and it's always good to be making profit because without profit, everything else you do becomes pointless. While it's good to see those numbers increasing, keep in mind that healthcare is a complex and ever-changing market. So while Molina has posted positive profit, we need to remember that they operate in an environment with huge regulations and public policy changes. Those things are often unpredictable. The healthcare industry in general has a lot of competition, and the services they provide are essential, so they aren't going anywhere anytime soon. Molina seems to be on a good track right now. Alright, that's our decoding of Molina Healthcare's filing. What do you think is their most important opportunity or biggest risk right now? Drop your insights below, hit the like button if you found this helpful, be sure to subscribe for more breakdowns, and don't forget to join our Discord community for more conversation. Thanks for watching.